Let's take a look at what the market is currently doing. A week ago, we did our last presentation, and that was right in here. In fact, we finished just before the Fed announcement. We suspected that the market was going to be breaking out to the upside. Surprise favored the upside. How did we know that? And we could see from this strong price action that we've had, very little retracement, hardly any long red candles, and big gaps up. So asset managers who are looking to buy were behind the 8 ball. And so they had to keep bidding up, bidding up, bidding up, and no reprieve, no dip to buy. So they had to be more and more aggressive. And then comes the CPI. They couldn't really risk a big gap up on a light CPI number. So they were already starting to buy Monday. Then the CPI came out Tuesday. We had another rally. So again, keep in mind that they're playing catch up this whole time. Then we get the FOMC statement, and it was much more dovish than we've heard. And so we get this big rally up, a couple days of compression, and now we're continuing to float higher. And the natural tendency for a lot of you is to be very cautious on relative highs, and that's a good thing. We've kind of trained that into you, but this time is different. Why is it different? And how do we know that it's different? And I'll compare that to the drop that we had from August to October. When we had this drop, we didn't go straight down. That would be a sign of heavy selling pressure. Wham, 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 down the whole way. Didn't see that. We had these bounces. And so whenever we would sell off hard, go a little parabolic, we could expect one of these bounces. Same thing here. As we start bottoming out right here, just below the 200-day moving average, we bounced instantly off of it. Now, in this instance, we didn't have this type of price action. Steady buying the whole way up. And now we're actually knocking on the door of the all-time high right here. Right there. We are one good S&P 500 day away from the all-time high, and this is a weekly chart. And so asset managers are in there buying like mad, and that is what has changed. So before, they were relatively passive in here because they didn't know if interest rates are going higher and inflation was going higher, so they were more cautious. Now they are all in. And so institutions with their buy and sell programs are active in here, and they are testing the bid. They're testing the ask constantly. Well, now the institutions, and a large part of their business is to execute orders for other large funds. They see the orders coming in. So they're not running those buy and sell programs. It is long only mode. And that's why we continue to drift higher. There's disincentive for them to sell. They want to mark their portfolios as high as they can at year end. It's going to attract more inflows. So that's the difference. Harry, I'm going to switch over to you and let you have a few comments on what you're seeing in the market right now.
Yeah, I mean, I don't think anybody wants to start selling right now, not this close to the all-time high, like you said. I think also, it's Santa Rally. It's going to go into the new year. The all-time high is obviously going to provide some resistance, and you generally will need some spark to get through that. I don't necessarily see anything other than a seller's boycott, which in itself could be enough to get through that number. But, we'll see. Right now, we have kind of a low volume market, which you can expect going to the holidays. And I like certain stocks here. I mean, I I have an alert I just put on now for Google. I'd like to see Google break. Let's see here, 141. I'd like to see it break the high of the day today. If it does that, I think it's a good long. I think Amazon has been kind of right there. It's got a very clear resistance point on the high of the day today. And I'm putting an alert there too. So I have alerts on the high of the day for Amazon, for Google, just to see, if SPY breaks out. We're only, we're pretty much flat on the market right now. So I'm liking the price action, continue to like the price action at MDB, even though yesterday it was weak. And I like the price action on Adobe. I'm long both of those. So I'm watching Adobe right now, and looks pretty strong to the market at the moment. You look over at the sectors, and real estate, energy, those are the two top sectors today, maybe tech, but nothing's really popping right now for me. So it's just kind of one of those days where I'll trade something if it really jumps out, which is why I'm placing those alerts. Why I'm placing alerts at the high day for Amazon. I'm placing it high day for Google. It really has to grab me and say, you'd be an idiot not to buy here for me to enter with this type of volume, because, we're up 50 cents on SPY right now. 2 bars later, we can be down 50 cents on SPY. So, but I do think that the market is pretty strong right now, and people tend at this point to have this little voice in their head, and it tells them, oh, the market's going to reverse any second. Don't get in now. It's been going up for too much. It's the same little voice that when you see all these stocks and they go high, and then no one wants to go long on them because, no retail trader wants to go long on them because they're afraid that the moment they go long, boom, you're going to get this snap back. And all I can tell you is tell that little voice to shut the fuck up, because you need to, whenever that little voice is telling you something that you can't see, then it's just you and your fear of what you think's going to happen. And if what you think's going to happen actually happened most of the time, you would be doing really well. So if you're doing really well and that little voice in your head is right more often than it's not, and you have great intuition, great. Go with it. You're profitable. Don't let me tell you otherwise. But assuming that little voice in your head has led you astray, just like it has many times in many other situations, I'm sure, then do yourself a favor, quiet it down, that voice, and go with what you can see with your eyes. And right now, what we see is a bullish market going towards the high, all-time high, lower volume, but nothing, a pretty clear seller's boycott. I would be long here until I see evidence otherwise.
I am quite bullish, as you know. I have been for a while. And the drop this morning was our ideal situation. Heard a lot of clamoring about FedEx. Oh my God, their numbers bad. This is bad for the market. The futures are down 8 points. This is it. A gap down open is our best scenario, because we've got the longer term market trend. We wait for support, and then the market gradually starts to drift higher. We fill in the gap instantly. If you're that nervous, you have too much on. Or maybe you're just nervous and you don't have anything on. In that case, you're kind of picking a market top by not having any exposure. Cash is a position. You're saying ain't going any higher.
So there's a saying, I spent 99% of my life worrying about things that never came to pass.
Very true. So here we are compressing. And for those of you who are watching the right side of the screen, this is the S&P 500 on a 5-minute basis. So I'm going to keep that up. And then the primary screen will be a stock. And for the stock, I'll try and keep up with Harry. So you can see the Google reference that he was making. We've got this horizontal breakout right here, and the stock is trying to get through that relative high. which it tested today. So it does look quite good. 5-minute chart on Google, you can see that it rallied up. It's pulling back just a little bit, but it's still holding the VWAP. Market has done a lot of nothing in the last hour or so. So it's not a very active day. It's going to have to pause a little bit, and then it should make another run in a day or two. And let's go into the daily chart. And there you can see that big run up, pause. We've got another little run up in here. So we could just float higher on light volume. It's kind of what I'm looking for.
All right, let's see if we can find some trades. I noted in the room this morning. Let's see. I think Expedia was mentioned a few times. EXPE. I like that. I like the breakout here. It's not too extended. Decent volume in the past few days on this. It's a nice stock. I like Expedia. There is a bit of resistance up here, probably around 150. Well, actually, all the way up around 155, 155.50. But I like Expedia. I like this bounce here off VWAP. If it does bounce off VWAP right now, I think it's a decent play. For something like this, where you don't have a huge ATR on it, given its price, I'd go with 0.7, 0.8 call delta 8 calls expiring in a week or two.
Yeah, I like this stock too. It's a nice setup. This is one of my favorite ones where you've got this price compression. I'll put up the 1.0 squeeze indicator, and you'll see the yellow dots here with the bid increasing gradually. So it is compressing, but we're seeing higher lows. Boom. Finally, the buyers get so aggressive that they just step up and they start ripping asks. And that's when the stock takes off. I had one that I saw today that I liked, HLIT. I posted this in the chat room. And here you can see a big gap down, D1. Horizontal was resistance, now support. Stock breaking through that. And we'll take a look at that 5-minute chart. That is some strong price action.
I like this one. It also breaks a upward sloping line here. If you draw, from way back August 18th, connecting into let's see, August 31st, and then again October 31st. Then again, a lot of touches on this. 11:15, and then today it breaks clean through that line. Marching up towards the SMA 200, which is still a good 10% away from the price. So I think you have a lot of upside here with Harmonic, decent stock, decent volume. I like this one. This is the type of stock I'd buy shares on. I wouldn't so much mess around with options, but either way, it's a good, I think, like you always say, the instrument doesn't so much matter here. And I think a lot of people don't quite wrap their head around that. There are times where the instrument matters, right? Where out of the money bullish put spread is the right play, or you want to do a call debit spread, particularly if the option is too high in price. But generally, you get the market right, you get the stock right, you're going to make money. Could you make a little bit more with a different instrument? Yeah, but overall, you're going to be profitable. If you're not profitable, your problem isn't the instrument you're choosing to make your trades. It's the trades you're making.
Yes, and this stock is not a bottom fishing stock. A lot of times we have people catching a falling knife, like right here. I liked LIT up here. Oh, now I really like it. I think I'll buy some here because if it runs back up and fills the gap right in, I'm going to make a lot of money. This selling is here for a reason. Look at how much farther the stock declined. So from that $12 level, it went down to $9, lost about another 25% of its value. Higher low, higher low, higher low. All right, now we've got some months that this base has been able to form over. And now buyers are starting to come in and bid for this stock. And then you get the breakout and you start filling some of that gap. So this is not catching a falling knife.
Let's see here, some other decent plays. You're going to laugh, and I've said it before, but I like Moderna. If you look at the price action today, it's holding. I mean, you know, this stock faces support, bumps up. Faces support, now it's trying to break 90. You have about $4 until it's SMA 200, which I think it's going to approach as the year closes. It certainly has some volume today. And I also like today, would love to see a little bit more confirmation on it, but Dollar Tree really bouncing back off the October lows here. And today it just, I mean, if you look at the price action since November 1st, it breaks the 50 SMA, pops up, confirms above it, consolidates, comes back up again, another big jump, 4 straight days of huge gains, bringing it through the SMA 100. And then on December 4th, it consolidates again. And then on the 13th, it jumps up once again, marches up towards the SMA 200. Today, breaks the SMA 200, all on strong volume. Now it's entering the gap from 824, where it dropped down from earnings. So now you have the stock entering the gap, breaking 3 SMAs in 2 months. In fact, I like this so much, I might just go long right here now on Dollar Tree.
I'll put up the 5-minute chart. You can see today it's been grinding higher. What has the market been doing in that time? Compressing. So you can see that there is an underlying bid to the stock.
Let me see here. Okay, I'm going to go here and take the 131 calls on December 29th. 131 calls here, December 29th. So let me see, launch this ticket here. I got to do it on the Bloomberg terminal. And I'm going to put this in for, by the open, I'm going to grab 125 of them. I'm going to try to grab it at, let's see, the 131s. I'm going to try to grab it for $4.50 here. I think that's about the right number. I'll try, I'm not going to get it for that. I'm going to get it for, I'll try for $4.50. Okay. And route that through. Let's see. Fill. Done. All right. So I got it for $4.49, but I'll put it in for $4.50. I just bought Dollar Tree here, long Dollar Tree. I took the 131 calls. Notice they're 0.78 delta for $4.50. And I did 125 contracts expiring on 12/29. Really like what looks to be almost unstoppable price action here on this stock as it just continues to march up. So there you go, Dollar Tree. And as always, you can take a look down in time and sales and see my order of 125 contracts there.
I like it too. That's where I do all my Christmas shopping.
Oh, it must be a fun Christmas morning at your house.
Oh, it is. So at very minimum, it's got a chance to get up to fill this gap around the 141 level. That's a $5 plus move. Those options are going to perform very well if it gets there.
Yep. Yes.
Comment on Moderna. 'Tis the sneezin'. And there are stocks with seasonality. You get through Thanksgiving, Christmas, New Year's, a lot of people spreading COVID. Just that alone will get the stock moving higher. I know they've
Yes.
got a lot of things in the pipeline, and that's why you're long it, Harry. But there's so many other stocks like DraftKings. As soon as the NFL season kicks off, the stock rallies. I think Moderna, you're going to see similar.
Yeah, I think you are. I think, like you said, look, I'm buying it because look, the damn company's curing cancer. It just showed a 50%, and this is not a technical argument, of course, but it just showed a 50% reduction in the return of melanoma. It just showed a major improvement on lung cancer treatment. These are just two of 12 different products that they have in the pipeline, which separates it from Pfizer, which obviously vaccines are a huge part of their revenue, but all of these new products coming that really go towards addressing cancer are, in a year, 2 years, this stock could be worth $100 to over $200. So I'm holding it. It's obviously recovering nicely. Would have rathered it not dipped, but okay, it happens sometimes. That's where, though, you have to know. And when I bought it and I announced to everyone the difference between buying something for a technical reason. I'm buying Dollar Tree for a technical reason. I know nothing about the fundamentals of Dollar Tree. I did not look at its earnings report. I don't know how shopping is going. I know consumer sentiment is up, but I don't know how that impacts a discount store like Dollar Tree. I'm looking at the technicals on Dollar Tree and saying this is in the gap through SMAs. It's a good buy. A stock like Moderna, when I bought it, I'm buying that for its upside long term. So there, and I always try to make sure when I say, all right, I'm buying this or not buying this, this is my reason behind it. Whether it's a fundamental or technical. If it's a fundamental reason, I will let people know I'm buying this for a fundamental reason, in which case that means I am prepared to hold through dips because I fundamentally believe there's an argument to be made for a lot of upside on that stock.
Stock that I like is CVS. I've liked it for a while. I'm going to zoom in a little bit. You can see we had a breakout through a downward sloping trend line here. I'll show you that in a minute. Compression. Now it's making another leg higher. I'm going to take the SPY overlay off and we'll zoom out, get a longer term view of the chart. And let's see where those trend lines come into play. We've got a few of them right now. You've got a very nice horizontal breakout. There were also some longer term trend lines that came into play like that. And that's what got it on my radar early here. But I like to continual growth, float higher. And we'll zoom in.
I like CVS. And speaking of which, if anyone out there gets COVID, CVS is the only pharmacy, I believe, that is carrying Paxlovid. So, oddly enough, no other pharmacy is carrying it, which strikes me as a little wonky, but it is what it is. Can't get it at Rite Aid, can't get it at Walgreens, can't get it at your local pharmacy, but you can get Paxlovid at CVS. So, it's I don't know exactly how that happened, but it did.
Let's take a look at a few questions. So please, if you're on YouTube, post your questions there, and both Harry's channel and mine. I'll also take a look in the chat room and see if there's anything I can answer.
Okay. I don't know if it's running in my chat room or not. I'll take a look here. Is it running there? Yeah, it is. Look at that. Okay, I'll take a look in my chat room as well. Oh, nope. What the hell happened there? Close that. There.
All right. Well, please post your questions. Not seeing a lot of them come up right now, so we're going to continue.
Someone asked if there was a short squeeze going on SoFi. I don't see that at all. But if you see anything, I don't know where you might be getting this short squeeze on SoFi, where someone posted that in the chat. I don't see anything there.
No, typically a short squeeze, you're going to have a tremendous drop in the underlying stock and a lot of short interest on it. You're not going to have this choppy downward movement. And when you get that short covering, it's not going to be a series of up days like this. It's going to be long green candles, and they're really going to try and put the hurt on those shorts. You will see many stocks right now rebound, and they are the dogs that are finding a bid. So there are some short squeezes that I've seen out there. Those are typically your really weak stocks.
Yeah. ARM has been popping. I mean, the problem with stocks like ARM is obviously you had an IPO back in September, I believe it was. And yeah, it's been marching up since its lows in October, where around 46 was the lows. It's now at 72. And if you look at the chart by itself, and you certainly look at the last month, the chart looks good. The problem is you don't have the historical data, right? You barely got enough for an SMA 50 there. And it's a risky stock. But technically, it looks good. I mean, for anything that, IPO'd back then, it's as good as it could look. ARM looks good on a technical basis right now. But be prepared for some wild swings, because a stock like that could be the result of heavy buying from an institution right now as it's accumulating a brand new stock. And you don't know when that accumulation might stop. It might not be because it's a new stock. It might just be an early accumulation. But right now, it looks good. I also really still like Google, as it's now coming back and bouncing off VWAP here. So Google would be, until, I have the alert set for the high today. But it has, if you look at 1011, you draw that downward sloping line connecting over to 1018, connected to the top of the wick on 1122. And today it gaps up above that and just continues up, where you now have this new line of support coming in at around 140.30. So if it can get above the high of the day, I would probably also take Google as a long here.
Like it. You figure if the market's going to rally into year end, Microsoft, Google, Apple, Amazon, they should all be participating.
We have a couple of questions here, a bunch coming in. All right. First one is, what are your thoughts on CVNA? Crap company, but popular stock. I have no thoughts on it here today. I have two pretty much doji candles after a gap up yesterday. I don't know. I don't like the stock. It's very choppy stock to me. Yes, in the last month or so, since December 1st, it has been on a steady jump, where it jumps, it consolidates, it jumps, it consolidates. It looks like it's consolidating again. It's a very news swingy stock, so I don't like it. I don't want to touch it, and I don't see anything technically that would give me the impetus to touch it today. It's relatively weak at the moment. That's my first thought.
You're going to like this technical analysis, Harry. Wait a minute. There's an inverted head and shoulders.
Of course, I missed it.
There. And there's your neckline.
Inverted head and shoulders. You know what inverted head and shoulders means? It means the stock has its head up its ass. That's what it means. Let's see here. Next question. Why do long selling climax type of candles get reversed so easily? Well, they don't always, but that's a tautological question. By definition, a selling climax is going to be reversed because it's a climax. And if I keep saying climax, this is going to start getting some odd. Anyway, but that's the whole point of it, right? If it was just a long selling candle and then it just kind of consolidated, formed a bear flag or whatever, it wouldn't be a selling climax. There we go again. What it basically means is that either the price is being driven down and then being bought up when it hits a support level, or there was one large seller in there, and after the seller cleared out, the stock rebounds. Either way, you can't kind of count on those. You know them when you see them. They're very heavy volume. They're very, they stand out. But they don't always reverse. You have to make sure you get confirmation that at least half of that red bar is erased before you start being confident in going long.
Yes, to the selling finally reaching a peak. That's what we call the washout. Those who had sell orders yet finally just say, forget it. I just want to get out of this thing, just dump it all. And then at that price point, somebody is interested in buying it. And there are probably some bearish speculators who are also there. And when they see the stock lift off, they have to cover their shorts. And so you've got natural buyers at that level, and you have shorts that have to run for cover. Both are buying influences on the stock.
Agreed.
I have a question for you, Harry.
Oh, go ahead.
Why do you prefer to do shorter term options spreads right now versus Pete and Dave, who seem to be favoring 3 to 4 week long options?
I mean, all my options are generally a week out, right? So they're December 29th. I'm not pushing them into the new year. My thesis covers a bullish Santa rally up until the end of the year, and that's what I'm buying the options for. I'm holding them for a day or two, and I'm getting them at a 0.8 delta. So I'm not so sure that there's that much of a difference or gap between what Pete and Dave are doing and what I'm doing here. I'm just not buying January, mid-January or February options until I see how the year starts.
Yeah, and for me personally, it's more a matter of feeling that the market is going to continue to grind higher. If I buy longer term options, I don't have to worry about time decay. It's a core position. If the market has a dip along the way on a shorter term basis, I will be taking short day trades. So I'll be hedging those longer term positions in that fashion. And I don't have to navigate the bid-ask spread on options. I just kind of put it on and let it sit and then tend to my normal shorter term trading. Personal preference. That's really all it is. And
I tend to mitigate
thesis
by going at a 0.8 on the delta. So I don't get as much of the time decay because I'm paying less than the premium.
Yeah.
But it's 6 of one, half a dozen of the other. Costco, I'm bullish on Costco's long 661 holds. Curious your thoughts if it looks toppy or overextended given today's drop. Well, I mean, it was a bit extended from its EMA, whether 15 or 8, whichever you use. So the slopes weren't matching up. There was probably going to be a pullback. I'm not sure if there was any news that's causing a pullback now, but I'm not surprised by it. I agree with your line in the sand of 661, and if that falls, I wouldn't be so bullish on it anymore.
Yeah, I mean, for crying out loud, look at the business model. That is a retailer, and it has gone parabolic. So it's going to have pullbacks, especially after long bars like that.
Yep. Humberto asks, what are your thoughts on the macro and overall market going to 2024? Feels frothy and would not be surprised if we correct. I'm not sure. I mean, I know what you mean by feels frothy, but what other than, look, it's been going up for a while. It should go back now. Is there anything else there that gives you the frothy feeling? Because I can't tell you how much. I mean, if I had to give a top 5 reasons why traders lose money, somewhere in that top 5, not sure where, would be their feelings, their gut feel. And what retail traders can't seem to wrap, and this is not anything to Humberto or anybody else, but an ego around is your feelings aren't well informed. They're just not. You tell me I'm talking to an investment banker with 25 years experience. I'll say, fine, maybe you're right slightly more often than a coin flip. But tell me you're a retail trader, and I'm going to say chances are you're probably you're wrong more often than a coin flip. And you just always have to add, you have to really be honest with yourself. If your feelings were right more often than wrong, you would be doing better than you are. So at a certain point, you have to say, my feelings tend to go towards, I'm just going to think the opposite of whatever's happening. And every now and then I'm going to be right, just often enough to confirm that. Because every time I enter a stock and go long, it seems to reverse. So my mentality is, as things go up, they go back down, right? Well, that's not, the market doesn't follow that rule of gravity. Yes, it does retrace. Yes, it does revert to the mean at times, but in general, the market goes up, right? Remember a year ago, we were all talking about, oh, it's the end of the world. The sky is falling. It's a bear. And look where we are now, approaching the all-time high. So that is a kind of, I don't know, you really have to keep yourself in check there. I would say if you're that worried about it, then keep your position small. That's all.
Yeah, my take on it is during this rally, it felt pretty frothy in here. Look at that gap up right there. Look at that gap up right here, the one on November 3rd. Oh, yeah, this thing's going to roll right over. It can't hold these gains. Well, there's another gap up on November 14th. Oh, well, now for sure. Look, compressed candles. We're getting near the high of the year. Oh, yeah, this thing's frothy. You missed the whole ride with that kind of mentality. So I talked about this in the last video. If you are a longer term swing trader and you get this nice rally in here that we saw in the middle of the year last year, and you're long here, the market pulled back. Well, you don't have to panic here. This tells you that buyers are interested. Look, they're interested. So wait for that retest. You're going to get a bounce. Bull markets die hard. Get the bounce. Okay, now I'm seeing some resistance here and a lower high. Now I can start to lighten up on my long-term bullish positions. But if I do that here and I do that here, I'm missing all of this. So wait for the price action. You don't trade your gut feeling because it's going to be wrong, just as Harry pointed out. You trade price action.
Yeah, I mean, look at AVGO. You go on Friday the 8th. All right, it comes up, and then the 11th. Wow, that really jumped. Okay, now it's at 1,000. I have to sell. I mean, this is it. This is the top, and now it's at 11:30, and it continued. Today it's just taking a little bit of a breather. It could have gone back down. It could have gone up. But this whole idea of knowing, it's obvious. You've all heard the idea. It's calling tops, calling bottoms, and it just doesn't work. But people will continue to try it, right? They'll continue to try to call tops and bottoms because that's where they think the money can be made. That is not where the money can be made. The money is made in the trend. The trend is your friend. Go with your friend. Okay. Can you look at INMD? INMD. Let's see. I don't know what I'm looking at. I'm looking at a stock that's not doing a fucking thing. It's got no volume. It's got no relative strength. It's got no home. Nobody loves it. Nobody wants it. Why am I looking at it? I don't want to look at this stock. Why do you look at the stock? Forget the stock. It had a nice gap up a few days ago over the 50 SMA, and then it just consolidated since then. Wait for it to pop out of consolidation. Put an alert on the top of, let's see here, Thursday's price action last Thursday, and leave it alone.
Click GTC, click on that candle. There's your GTC alert. You can even set one in here if it goes into the gap. Set that. Now you don't even have to look at it. Until it gets through that, no interest. Until it gets through that, no interest. Could also put one down here, and maybe I'll do that. Click on that candle, and on this one here. And now you have an alert line so that if it breaks down, I'll know about that as well, because then it would become a good short. I have someone asking me on PATH, am I still long? Yeah, I like the stock. This one I just highlighted on Sunday. So yeah, it had a nice little move up in here. You can see higher lows. Zoom out a little bit. You can see, yes, it's on this high plus right here. It's not worrying me at all. And let's put up the major moving averages. And you can see how none of those are in play here. So yeah, I still like PATH. Take those moving averages off and use it on another screen. Let's see, the other question was on AAL. It was another stock I recently highlighted. Sorry, by the way, for the confusing dialogue on my part. I'm having a dupe feedback here, so I get to hear myself. It's confusing the hell out of me, quite honestly.
I love to hear myself, so just go with it.
Very nice price action on AAL. There's no reason to get out of it.
Here's another great one. I don't know if it's been mentioned yet in the room or not, but take a look at Caterpillar today. Now it's a little extended, which would give me slight pause, but I really like this here. The moment it broke the 100-day SMA, it just shot up, and it has continuing to skyrocket here on good volume, above average volume on 3 of the last 4 days. I like Caterpillar here, and I also like that Caterpillar is currently at, I believe, am I right here? Yeah, I think so, an all-time high. And I love stocks at an all-time high. No bag holders above, no reason to sell. Caterpillar, plus what you have, the recent home buyer, the home numbers today, a lot of building going on. I mean, oh, Isidore just noted it too. Okay. Caterpillar, yes. I like Caterpillar a lot here.
Yep, and you've got the market heading sideways here for the last 2 hours. Stock is at the high of the day and continuing to move higher. It should be able to get through.
Someone here is asking, can you tell me about BVN Long? With a moniker of Vegas 2772, or 2772. Okay. BVN. Huh. Wow, buddy. Look at that.
Well, this is a minor. So this goes hand in hand with the Nippon Steel takeover of X, CLF. Yes, that's very strong price action.
Yeah, that thing's just popping up there faster than a mouse in a barn on fire. Whew. Look at that thing there. Yeah, it's a nice movement there. I mean, it's a little parabolic here, and I'm going to assume there's something driving this news-wise, like you said, but I would almost treat this almost like a momentum type trade if you were to trade it. But nice.
Yes, it's a minor, so it's a cyclical business. The only reason for a stock to go up like that would be a takeover.
Yes. Yeah, that's got to be it. Okay, let's see here. Dollar Tree definitely moving nicely here. My position is now up 50 cents, which is nice. My my options there. So that's a nice move. And since it's in the gap, normally I'd say, all right, I'm going to set a profit target of $1.50 above what I paid, right? So 125 contracts, I'm going to set it. I paid $4.50. I'm going to put it in for $6. But because the stock's in the gap, because I'm bullish on the market, and because I have more than a week on this option, and it is a high delta, there's no reason for me to close it. I'm just going to hold it and let it run. Why not take $4 off of it? Let's see. What else do we got?
Got the market poking through to a new high of the day.
What is?
The market is poking through. SPY.
Indeed.
And so now we are about 45 S&P points from the all-time high.
Yes.
Which is one good day.
It is. Kind of crazy to think we might end this year with a new all-time high on the market, considering how we started. That is kind of impressive. And they won't get credit for it because, again, we said last time it was their own kind of mistake that got, I wouldn't say it didn't get us into the mess, but it was their mistake in not acting sooner. But the Fed has managed to thread an extraordinary needle here that no one really thought they could. Now, don't forget, the thing that is partly propelling this market is the idea of rate cuts, and the idea that rate cuts are going to come into play earlier rather than later next year. That gives a lot of time, right? That gives some time between when it's expected, like March or April. It's expected to get a rate cut in there, or whatever that the FOMC meets there. But what the Fed is going to be doing when you see, Harker and Goolsbee and all these start giving their daily pressers, is their job is going to be to kind of keep expectations in line. You'll notice some of them are saying, oh, I only envision 2 cuts in the latter half of the year. Others are much more dovish, and they're balancing each other out where the market goes, okay, we priced in around 4 cuts. We believe there'll be 4 cuts, and we're not seeing anything yet to dissuade us from that notion. Only Powell can really kind of change that by coming out and saying, you're all out of your fucking gourd. I'm not cutting rates 4 times in 2024. It's not happening. Maybe you'll get 2, if that. Barring that, this market is pricing in a return to a low interest kind of easy money environment. I don't think we'll ever go back to, you never say never, stupidity and greed being what it is, but I don't think we'll ever go back to
All right, let's see if I can find another question here.
There's one in the one option chat room there. K Must. Want to take that one? Can you not hear me, eccentric or something? And anyone having trouble hearing me?
So trying to scroll down and find the question. So I'm sorry, Harry, can you just repeat the question?
Yeah, hold on. I just want to make sure you can hear me there. Or that everyone can hear me. Some people are asking, oh, there you go. Now they can. There was a question that says, do you pay attention to relative strength, relative weakness after your entry, or do you look at the daily to determine whether to exit? Well, both. They're not mutually exclusive for me. But certainly if I go into a stock because it has relative strength and it loses that relative strength, and I'm in profit, or if I'm not too deep into it, yeah, I'm going to probably exit if I have a shorter term thing. Now, if I see Dollar Tree, for example, lose its relative strength right now, but it's brief, I'm not going to freak out and jump out of the stock. That will oscillate. I need to see some real definitive selling while the market's strong. So the stronger my thesis is, the more, evidence I'm going to need to back me out.
Yes, and you can see how the relative strength line is above zero here. Market flat in the right corner. DLTR continuing to grind higher. We can also see that by putting the SPY overlay, flat market, rising stock. I have a question from the YouTube channel. How do we know when the stock is the real deal? This is how we tell. I go through this procedure in almost every one of my videos. If you watch enough of my videos, it'll become ingrained. And relative strength on a 5-minute basis is not as meaningful as relative strength on a daily basis. So if I'm trading off of a daily chart and that relative strength, and the stock goes relative weak on an M5 basis, don't freak out. It's okay. You still have that longer term chart to lean on.
Someone asked here. Someone said I got cut off right after I said the Fed will never go back to. I don't think they'll ever go back to a 0% interest rate. I think that, never say never, but free money is probably going to be a thing of the past for a while. But I do think a 1% to 2% is probably where they'll wind up settling at. Question: have you reflected on the last 2 years of trading? It would be really nice to hear your thoughts on the hard conditions you both led us through. We owe you a lot. Thank you. Oh, you're welcome. If you might have noticed, in the last 2 years of trading, my position sizes have certainly increased quite a bit. I mean, look, this year, probably my best overall year in terms of profit. And what it really comes down to is the ability to trade in any market. And I think it was discussed earlier in the chat room today, but a lot of you have really got blindsided in a way by a bear market and didn't know how to trade it. Then some of you have only known about the bear market, and that's where you started in the bear market. And now that we're in a bull market, you're filled with distrust. So you don't know how to trade that. It's a really difficult mindset adjustment. The only way to stop that kind of those issues is to really focus on trading what's in front of you. Admit to yourself, I don't know shit. I don't know a damn thing. I don't know why the hell this is doing what it's doing, and I don't care. What I see is a bull market. I'm going to treat it as such until I see otherwise. Yes, does that mean at one point this market will probably, nothing goes up forever, it will probably reverse, and it will do that while I have a bunch of bullish positions on? Yes, but you will have made so much money on the previous week, 2, 3, 4 weeks, whatever it is, riding this up, that 1, 2 day, that reversal isn't going to hurt you too much. But it's this mindset thing that people have that either only know how to trade a bull market, or a rarer thing, but not so much now, is all the people who joined only in a bear market and now have this very cynical, distrustful view of the price action, that it's always going to just reverse and screw you. So the last 2 years actually for me have given me even more confidence that I can trade both sides of it, because I wasn't trading in the 2008 bear market, right? I wasn't trading back in 2000 during that crash. So I'd faced downturns, but not a bear market per se. And now I know I've traded my way through successfully a bear market and come out the other side in profit. That is, that's how I think about it.
Yes, and those markets will also force you to adjust and adapt to changing conditions. You have to identify them, and you have to adapt your trading. And it's a fluid process. It's not a mechanical one. Typically, when you go from bull market to bear market, there's a transition phase. Those are really hard to trade. Same thing when we put in the low in 2022. From that point until the end of the year, very choppy action off of the bottom. Transition period, very difficult to trade. When you have a lot of volatility, I personally tend to shorten my time horizon, do a lot more day trading. And it's not until that I feel confident that those lows are in and that the bear market is starting to end that I get more aggressive with my longs. Swing basis, you got the market heading higher for the last 100 years. That's the side that you want to be on with your swing trades. Now, when I talk longer term, I'm talking holding something for 3 or 4 months or even 2 months. If you're swing trading on a short-term basis, then you can take credit, you can trade, put debit spreads with maybe a few days till expiration and do fine. You're still swing trading, but your duration is very short.
I'm also trading less. I mean, in a bear market, but people remember, I don't know if people have been following me, remember this, but I used to have sometimes 15, 20 trades on at one time. Just playing a lot of volatility there. But in this market, I have 2 or 3 what I feel are really good, strong trades on, and I let them go. Today I added Dollar Tree. If Google exceeds the all-time high, maybe I'll add that one too. 2 trades. Close them out in a day or 2. So I'm also trading less, oddly enough, in a bull market, but I am certainly trading with more volume in a bull market than in a bear market. So while I would have had 15, 20 trades on in the bear market, they weren't 125 contracts, for example. So there's a give and take there. But I would, definitely play the field a lot more in a bear market. You know what? I'll be right back. I'm going to take a brief cigarette break here. And Pete, I'll let you
Yep,
jam
I'm
for
going
a
to keep
while.
going.
Give me a couple of minutes. I'll be right back. By the way, the auction is starting in 4 minutes. That's Dan pointed it out. That's usually a market moving candle. Maybe it won't be this time, but there you have it. Come on, Moderna, get your ass over 90.
And I'm going to take my earbud out so that I don't have to hear myself twice. That is really screwing me up. You can see Caterpillar on the high of the day right here. So that's doing very well. Looks like it's going to continue to move higher. The concern is very light volume. CVS, I just took a look at that. You can see how that is making a new high of the day. There's a nice little pullback to the VWAP, and we're starting to grind higher. Market trying to lift off a little bit right here, but it also has very light volume. You can see that right there. So we'll take a look and see if I've got any other questions that I can answer right now. So please keep posting them and we will keep going through them. The market seems like it's got a lot of landmines when it starts to transition. There's no question about it. And if we take a look at what happened back in 2021, here's the year end. We did not get a year-end rally. The Fed was going to be hiking interest rates. Inflation was a problem. They had gotten it wrong. So if you compare this chart to what we're seeing right now, you can go back and watch my videos. I had mentioned that when you start to see this type of volatility into year end, this is what we saw in October. Really nice. This is what we would expect to see into year end. And then all of a sudden we get into November, wham, we get this big drop. Okay, well, we rebounded nicely from it. Wham, again, we get this big sell-off. Those are the tells that the market is getting very toppy. And lo and behold, we roll over in 2022. This was a very difficult time for traders because those who did not identify these warning signs were still out there doing the same strategies. Let's say that your strategy was to sell out of the money bullish put spreads. you get your head handed to you. Oh, the market bounced. Okay, I was a little bit early with that. I'll go in and I'll sell some more bullish put spreads. Blam, you get the next wave. And then eventually by the next wave of selling, they're broke. They're out of the game. And selling bullish put spreads is a very consistent strategy. It's a great longer term swing trading strategy, but you have to be able to identify changing market conditions. So here we get this big decline, and there's your bullish engulfing candle off the low in October 2022. Market was still having a really hard time. You get these bounces. This looks like a nice bounce right here. Had nice duration, nice height to it, but then blam, we get this next wave of selling, and this was the whole Jackson Hole thing that we saw in October 2022. And you get your fits and spurts because that base has to form. And so let's go into the weekly chart, and we'll be able to see it a little bit more clearly. And there you can see how there's a bottoming process that takes place. And now we finally have a series of higher lows. And then now we're actually starting to get some pretty decent price action earlier this year, but still a big drop in here. And now finally, this move is very solid, and we're starting to get through that all-time high. So those transitionary periods in here where you see lots of mixed green and red candles, very, very difficult for traders. This is when you have to shorten up your time horizon. This type of price action right in here. Keep everything very short term because you don't know if the market's going higher or lower. So this is when we were focusing more on day trading. Once I saw this, I knew we would be getting back into swing trading mode because on a monthly basis, that's what the market tends to do. And so we've just gone through. Look at how easy that little bearish market was. Doesn't look like anything. It's a tiny little blip on the radar. But those of you who have gone through this know how difficult trading during this time period was. And so you've honed your skills. You've got greater discipline. You're patient with your trades. You're able to see the market well from both sides. That training is going to serve you well for the rest of your career. All right. Any other questions? Well, let's keep taking a look for some stocks and see what we can find. I'm just going to do some flipping, and I'm going to look at daily charts. And we'll see if we can find anything on Popbull that looks good. Google, we've already covered. The nice thing about this configuration here is that I can see how the stocks are lining up on a short-term basis. So my columns are configured so that I've got 5-minute to daily as far as our buy and sell signals. Then I have 15-minute to daily on relative strength. And then we're also looking for these blue dots. So it's real easy for me to just scan across and see which stock has the most green dots. GES. Doesn't look that great. See a lot of choppy price action in here.
All right, I'm back from knocking 7 years off my life. Okay, let's see. Oh, all right. What did the bond auction draw? A little higher than I thought. Okay, well, red candle, sure. Someone said very close to being over PDT restrictions. Story asked this. As I transition from a PDT restriction account to no restrictions, what should be the most important thing to keep in mind? Well, you've obviously built your account to get over it. Just the tendency when that happens is people will kind of just, I don't know, start over trading because now you can. Take it slow. You're probably just over the line, right? You're probably at just over 25. Give yourself a buffer. Don't trade too differently right now. If you see a great day trade that you can make, take it. But in general, I would not go crazy. I would take it easy, trade like you're trading, continue it, wait till you get a nice buffer, till you get around to 30 before you start really increasing the number of trades you make. Big tendency to overtrade when that happens with people.
Congratulations, first of all.
That
What a
too.
milestone. That's awesome to get past that restriction. So yes, everything else that I would have to add is consistent with what Harry's mentioned.
By the way, look at Dollar Tree here. You have this big red candle on SPY, and look at Dollar Tree holding up. That is relative strength right there. That tells you there is institutional buying in Dollar Tree as it goes into this gap, that even though the market is down, even though the bond auction comes in and there's some sell-off here, Dollar Tree is wholly unaffected by it. So that is one of the benefits of relative strength, where my position doesn't take a hit even though the market did. That is a buffer for me. If I wanted to get out right now, I could still get out with profit, for example. Not getting out, but if I were going to, I could do that because I chose a stock that had relative strength to go long on. And now the market's rebounding, and here comes Dollar Tree. You'll start coming up with it. So that is an excellent example of the benefit of relative strength in the market can give you.
Nice trade.
All right, let's see. I got some other questions here. The market seems to the landmine new traders get tripped up by. How many cycles do you think a trader needs to go through before they can catch the shift, or is 2 years the answer? 2 years. I mean, look, the 2-year point that I put in the wiki, the whole process that I think people need to go through, like I always say, it doesn't take long to learn the method, the fundamentals. It takes 2 years to get your mindset right. It takes 2 years. It's the little things that kill you, and they add up. It's the jumping out of a trade because you see a couple of red candles. It's, the taking the momentum trade. It's the tendency to counter trend trade. All of those things are issues that really take the 2 years that I'm talking about to overcome. And because these are mindset issues that really go beyond trading. They're kind of ingrained in you, that you kind of bring that to trading. And you don't learn it in trading. Some of you do if you learn to start trading by using momentum trade bullshit, YouTube scammers, scum of the earth, all that other fucking crap. But if you are really serious about trading, then yes, I know it takes a long time. I know a lot of you probably get into trading because you want money now, but it takes that 2 years to truly get through it, because you need to, even as you say there, Dan, I mean, you need to experience a lot of these shifts. You need to take your lumps, and hopefully you're not putting much money into it when you do. So that is my feeling on it. But people like to try to rush things, and that's a problem.
Yeah, it took me a lot longer than 2 years. I had to figure out this system, and I had no clue, and I had nobody to teach me how to do it. So I'm hoping to cut that learning curve down for all of you. And if you gave a golf club to someone and you told them, here, swing this, and they started to try and hit that little white ball, they would go, well, this is really hard. I mean, for me to become a good golfer is going to take years. And it does. But for some reason, everybody thinks that trading is going to be so easy. And, with a golf swing, it's your stance, it's your grip. There's so many things that go into it. It's the basics, the fundamentals. And then once you get the basics down, then you still need repetition. And you need to see many different golf courses and be out in many different conditions. And that's what experience gives you. And that's what you need to become a good trader.
Absolutely. Been reading Reminiscence of a Stock Operator, outstanding book, very market first. Is much of it still relevant today? I mean, look, Livermore is always relevant. I believe he killed himself because he, also had a bit of a gambler in him. But it's a good book. Good book back in the 20s. Good book now. I would certainly recommend it. I don't think you're gonna change your life with it, but I think it's a worthwhile reading. It's an easy read. It's fun. It's a lot of good lessons in there, but never opposed to reading more about Livermore.
Yes, and it shows how things that were valid so long ago are still valid now.
Yes. Someone so asked, I'm setting alerts and buying breakouts over trend lines, but often see reversals, even if buying in high volume candles. Any advice on red flags to look for? Wait longer for confirmation. If you see something breaking a trend line and your alert goes off, wait to see if it doesn't reverse. Wait to see that the next candle is strong. If you're looking on more of a swing trade basis, then you're gonna wait for the daily chart, wait for the next day for that confirmation. You don't need to rush in. It's funny. There's a quote from Arl Rothstein, who is a famous mobster / gambler and so on, and he said that some days he'll take 20 bets, and sometimes he'll go months without taking one. But when he does take one, he goes all in on it. I'm not recommending you put all of your eggs in one basket, but the idea behind that is a level of certainty that you don't have to trade, right? You don't have to rush into a trade. There's always this feeling you're going to miss something, but you can wait for confirmation. If it confirms and your read on the market was right, your read on the stock was right, you're going to have plenty of upside there, right? Maybe you missed the first initial move, but you're not going to get hit with that reversal. So wait a little bit longer. Look back on your trades too. Use your journal more. Look back on the trades where that happened. Look to see, okay, if I waited X amount more longer, sort of a walkaway analysis, what would have happened? It's the opposite of a walkaway analysis. If I did not enter that trade and waited instead, how many times would have I been better off by waiting and not jumping in? How much longer should I wait for that confirmation? And if you're getting that reversal more often than not, you're not waiting long enough for a confirmation.
Yeah, I think the alerts really help you a lot as well. We've had a lot of FOMO traders who have started to use alerts. You wait for the dip, you evaluate the dip, then you get an alert when the stock is back on track. And now all of a sudden you are avoiding bad entry points. And so I can give you an example, maybe on Google here. So let's do let's clear the chart off first, get those major moving averages off, and let's put up relative strength. And so here we would be waiting for Google to pull back, for the relative strength to go negative, and then positive. And so the way that we do that on a 5-minute basis is we create an alert, strength versus SPY, real relative strength, and we're doing that right there. And now we'll get an alert when the stock goes strong relative to the market. And so now you can take a look at it and say, Google held the VWAP. It's got higher lows. Looks like it's starting to come higher, and this was not a big pullback, and I can get long here and feel like I'm not chasing, versus a stock where you rush in and you buy it here, and then you see long red candles, and then you get your alert somewhere in here, and the stock is retraced all the way into the gap. You go, I'm not going to buy that. I did not expect it to fall that much. Thank God I didn't pull the trigger on this stock.
I agree. What are your thought process on doing out-of-the-money CDSs? When do you like using those instead of in-the-money or straight calls? I don't like in-the-money CDSs. I either do an at-the-money call debit spread which expires that same week, I tried to get a 50, you have to get at least a 50% of the spread on the debit. And the closer you are to Friday, the easier it is to be in profit there. On an out of the money call debit spread, I'll tend to do that rarely. I did it, for example, on Adobe, and still watching that. But that's on stocks that have a very high ATR, are on a strong upward trend in a gap, something like that, and will get a higher return. Like on Adobe, I'd be getting 4 to 1. On a stock that is, if I think is going to move in that direction, is going to make a large move. So, but it's rare that I'll do an out of the money CDS. Generally, it's an at the money CDS, expires Friday. Closer you are to Friday, the higher your expectation to do and get a decent profit return. Okay.
Out of the money CDS, market first, market first, market first. So where would you want to do one? Again, these are low probability trades, low risk trades, very high reward trades. So you damn well better have a super strong market trend. Powerful. I'm talking like off the charts powerful. Well, look at the chart. Where do you get those? Well, when you have a powerful move like this and a small, brief, shallow pullback, you're going to get a nice rebound because the trend is still in place. This is where you would try and out of the money call debit spread on the best of stocks because you know that you're going to have that big tailwind. Same thing here. You get this rally up, you get this compression. Maybe you didn't time that gap. In fact, that was probably FOMC or CPI or something. But on the back side of it, you know you've got some follow through here. Now you compress. You're not doing an out of the money short-term CDS here. You're waiting for that breakout from the compression. This is where you're doing that.
And keep in mind, you know, fundamentally what you're doing with a call debit spread is you're financing your call by selling the higher strike, right? You're reducing your cost and you're capping your gains because you say, okay, this is sort of where I think this stock is going to wind up with Friday, right? It's going to, based on its trajectory, based on the market, based on the ATR, based on the stock, everything, I think we're going to go to here. And with that, you finance the at the money call by selling the higher level call, the higher price call. And you're capping your gains, but also reducing your risk. Now, if you have a stock like Dollar Tree, for example, Dollar Tree's in the gap. Dollar Tree could keep going up into the $5. I don't want to cap my gain on that, right? I don't want to finance my call on that. I want to get all the profit I can get on Dollar Tree. So I'm going to just, you know, go straight calls in the money on Dollar Tree. So there's the kind of difference between the two. You know, when I have a lot of confidence, like I do in a trade like Dollar Tree, or if Google broke the high of the day, for example, I would go straight calls.
And there's an alert that just came up. The one that I just set, strong versus S&P on a 5-minute basis. Show me the chart. And Google's starting to just get a little bit of strength in here. The alert didn't cost you a dime. Took 2 seconds to set. You have no emotional attachment to the trade. Didn't cost you any margin or capital. And now you're just evaluating the nature of that dip. And if it looks good, then you're going to take the trade. And if it doesn't, then you're going to set another alert. Maybe you want it to go relative weak and relative strong again. Maybe you want to take and put a horizontal alert line here, or maybe one right here. So let's do that. Now we have a horizontal alert line. All right, it's starting to improve. I'm still not sure about the market. If it gets through that horizontal resistance, I'm in.
Great. Really like CVS. Nice.
What was the symbol?
I really like CVS. I'm saying it's a nice pick. Something popping up here on, let me see here.
I had a question on how to build a small account. The one thing that you don't want to do is to start trading options right away. You've got to get your win rate up. And provided that you get your win rate above 75% for a few months straight, it's going to take quite a while to get there. Then you just start taking trades and increasing from 1 share to maybe 5 shares and just grind it out. Find a broker that offers 0 commissions so that commissions aren't eating you alive. And then as you start to get to maybe the 6 or 7 month stretch where everything's still going fine, then start to look into some options. It's going to take you a long time to get there.
Yep. Team, looking at Team, I like Team, but that's a stock that looks a little extended to me. What do you think, Pete?
Looking at the M5, that is a nice grind. So I would day trade it for sure.
Yeah.
Would I swing trade it?
A little extended on the daily.
Yeah, it's a pretty good looking stock, but
it is.
I love that strength right in here.
Good volume.
Yeah. So
well above
right
the
here,
SMAs, plenty of room.
You can see that EMA 8. I use it just as a gauge, and I'd like to see the stock pull back to it or pause and the EMA 8 catch up to it. Then I would feel better swing trading it.
Agreed. Yeah, like the first decent pullback that then holds on Team, I'll probably take that. Take that stock. Dollar Tree still moving, nice. Let's see, what else do we have? Cat again, really nice. Now you could look. Now I'd be careful with a stock like Nvidia, only because that 500 level is psychologically clearly is a form of resistance for that stock. If you're having some trouble with it, I'm sure once there is news, and there's always news on Nvidia, it might break out. But until I see a convincing break over 500, this thing is now 500 is the new floor. I'm going to leave Nvidia alone. Now, a lot of people, and I see a lot of people online, thinking this is a good time to short Nvidia. It's going to come up against 500 and that. And then, what happens when all of a sudden, a news break that Nvidia chips are selling like crazy in China all of a sudden, and it goes to 515. Now you're screwed, right? And now you're not going to recover. Be patient with a stock like that. Nvidia is a great stock to trade. The Nvidias and the Teslas of the world, they're great stocks because they're everything you want as a day trader, right? You want to have that volatility, that guarantee of volume, that guarantee that this thing's going to move. But when you're at a crux point like this on a stock like Nvidia, that's where you should just sit back, wait to see what direction it's going to go in, wait for it to make the decision, and then you can piggyback.
This type of chop is something I avoid. I don't like it. I like nice tight price action because that tight price action tells me that there are either a lot of sellers and the stock can't bounce because every time it tries to, they're playing whack-a-mole with it, or the stock is moving higher and you've got nice tight price action on the way up. And that tells me that every time that there's a seller, there are even more buyers waiting to come up and meet them. So Chewy was a great example of the kind of stock that I like. This is the pattern I like to trade. That chopping back and forth, no thank you. But this, wham, 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 just relentless selling. This I can get behind. This I can feel very confident. If I short it here, I'm pretty confident it's going down. Oh, look, it went down again. Oh, I think I'll add some. Oh, oh, hey, it went down again. Very easy to add to those positions.
Someone just asked about MMM. Much like the stock before, I don't ILM, and I don't see what you see here. I mean, it's consolidating. It has a floor here at 105. Has a top here at 107.60 something. It's stuck in a range right now. It's relatively weak today. I wouldn't touch it until it breaks the range, either on the downside and starts to fill that gap, or on the upside and breaks out of compression. Either way, I would not touch the stock. I mean, if you look at the long-term trend on MN, and this thing has been just in a nosedive. So right now, I would leave it alone. Yes, is a nice downward trend line has been broken to the upside a little bit here, but that happened way back on last week on Thursday. So until it shows me something else, I would not touch that stock.
Agree. Also look at other companies in the chemical business like Dow Chemical. You can see what they're doing and see if the sector has any strength or the group has any strength. But yeah, in general, that long-term downtrend that's nasty for 3M.
What about on semi? Let me take a look here. Again, same thing. I mean, I wouldn't touch it. The thing is not only relatively weak today, but it's directly below the SMA 200 and directly below the SMA 100. Both of those are providing strong resistance that the stock could not get through ever since it tried on Thursday. This thing is I would not even look at on at all. And there's nothing technically indicating that on would be anywhere near of a good trade. Don't touch it. Off. Get it? Get.
Oh, good one.
Yeah. Off. Don't do on. It's not good. What is the lockback period for relative strength indicator? And is it the same on the intraday as the daily chart? You mean look back period? I think it's what on the daily 10 days, something like that, 12 days. And on the 5-minute, I forgot what it is, maybe 12 periods, 60 minutes look back, somewhere around there. I'd have to look it up. It's you could just look on the forum, and the equation is there, so you can see. But you can change the look back period depending on, all the things we have is on default, but that's what we find useful and have found useful over time. The changing of the period could just be a matter of how sensitive and how short term you want your trades to be. Someone asked, can you talk about adding to winners? I am long. This is a great one. Goofy, long CVS from 75. I want to add to my position. Stock had a nice breakout today, thinking I can add when the stock pulls back a bit. So I want to make sure the breakout holds. Early stages, want to get into the habit of adding to winners. Adding to winners is like the number one thing that you can do that can really up your game. But it takes a lot of mental fortitude to do that, because sometimes you add to your winners and you have to deal with the fact that you now have a pullback. You're smart waiting for that pullback on CVS, but I think I like it. I think it's a safe trade to add to. If Dollar Tree continues its run tomorrow, I'll probably add to the position instead of closing it, for example. So it depends on your confidence in the position, but adding to winners is probably the number one thing that profitable traders do more often than non-profitable traders.
Yes, and it's nice because when you add to a winner, you still have a very good cost basis. So you're still making money on it. And worst case scenario, you can always bail out and scratch. Now, again, that's just worst case scenario in the back of your mind. But then as that stock starts to grind higher and higher, now you've got a lot bigger position that's really starting to kick in.
Okay, let's see here.
Versus adding to losers, it's exactly the opposite. Oh, gee, I was wrong before, and now the stock is pulled back, and I'm going to add to the position, but I'm still losing money.
Yeah, double down on being wrong. Very popular choice for people. Let's see here. Someone said we don't speak of Chewy. Funny. Blue, someone asked. Oddly enough, with Blue, I got allocated 14,000 shares this morning of Blue. Just one of those things JPM does. Like, here you go. Here's a bunch of shares at a low price. That's why Blue is down today, by the way, because of that that allocation that went out. I'm not the only one who got the allocation. They allocated millions of shares of this stock. So that's the reason the drop, because they allocated the stock at like around 140, 150. And so, but there's no reason to go long Blue here. I mean, it's a $1.35 stock. I just got allocated by it to it. That's all. But I didn't even announce I got allocated by it. So you don't even know that. I wouldn't touch it. No need to touch a stock worth $1. And I know Joe thinking, I can buy X number of shares of this dollar stock, and if it doubles, because Blue can double, then I double my money. Blue can also drop to 75 cents too. So, whenever you start to approach this as a gamble, I'm going to quickly make money, you're doing it wrong. It has to be approached, I say this every time, like a damn job. It is a job. You are working. You aren't looking to double your money this quickly and do that. You're looking for a consistent return every month. I know X% of the time, a trade like Dollar Tree is going to pay off for me. X% of the time, I'm going to take $2 a contract, X% $3, occasionally $4, occasionally $1, and a small percent of the time it will reverse. There'll be a news or event or something, and I'll lose money on it. But I pretty much know what my win rate is going to be with that type of trade. I know what I'm looking for out of that type of trade, and I know how much I can make with it. I am not looking to go and say, all right, I can double my money here on a dollar stock, or do this, or this is going to reverse, or I can pick a top. I'm not looking to say I'm going to take an out of the money put on the video right now because it's going to get, smacked down at 500. And think about that. There are hundreds of thousands of traders right now that are thinking the market's at a top, Nvidia's at a top. I'm going to buy an out of the money put for 50 cents or $1, and I'm going to ride that. If Nvidia drops, $30 by Friday, I'm going to be, make all this money. And 1 out of 50 times maybe that happens. And you hear the anecdotes of it. So it's like, oh, I bought 500 puts on Nvidia and they now are 10 times the value. Look at my P&L. But you don't get someone posting the other 49 times where they lost everything on those puts. So it adds up. You think they're cheap, but every week it adds up. It's kind of like, you could sit there and play poker at a casino all day long and not play a hand. But eventually the table charge of every hour where you're donating $15, whatever it is, to the table is going to just drain your stack, right? That's what you're doing. You're kind of just giving your money away on a lot of these for a scratch off chance of winning. And it's not a good bet. It really isn't.
I had a question on ConAgra. This is a stock I highlighted about 2 weeks ago. Do I still like it? This is a longer term play where I would buy an option in the money for 3 or 4 months. Yes, as long as this upward sloping trend line is intact. You can see that the 100-day moving average is being tested. I want to see that hold. So this is kind of a critical price point at the 28.50 level. Yeah, I want to see this survive. I want to see the stock bounce off of it and continue to move higher. So it has been in a fairly steady downtrend. We don't want that to gain momentum on the downside, but we're long in here. So we're really kind of in at this same level.
Stock I like here, Pete? I like Abbott. Take a look at Abbott. Look at that nice price action. Look at the price action on the daily chart here. It's in a compression, but it's breaking out right now. Look at that steady orderly climb ever since it hit its, low way back in or mid-October, and breaking all of its SMAs, decent volume here. I mean,
Yeah.
I'd love to see it break out to a new high today, which is what it's doing right now. But this stock's not going to blow the doors off of anything. But I think it's a nice, clean chart.
Yeah, I agree. It's one of those grinders. Just
Mm-hmm.
follows that EMA 8, never gets too far ahead of itself. Compression, go.
Let's see here. Can you look at UNH, please? Wait, so I'd love to try one option platform. Is it possible to connect this to the Norwegian, Scandinavian exchanges? I do not think so.
No, it is not. It's a data issue. I don't have that data, and I don't have the demand for that data. So until I have a lot of users asking for it, it's very expensive for me to get this data, and I'd have to run all the calculations for it.
UNH, someone asked about. Don't touch it. It's in between its 50 and its 100. It's down today. It's relatively weak. Yeah, it bounced off the 50. I'd like to see 2 or 3 straight days of relative strength. Right off the bat, any stock you see right now that is down on a day where you have the market is up, not up a lot, but it's up, and the stock is down, that stock, right off the bat, that stock doesn't have relative strength. So that is like your primary check mark on should I even consider this trade. So no, I would not consider UNH. Abbott versus Pfizer. I mean, Abbott all the way. Look at Pfizer. Pfizer's on your is a kind of bottom feeding. It's filled its gap a little bit, but Abbott has a much better daily chart. And how can you tell CAG has not lost its relative strength? Well, it's bouncing off its 100.
Well, it has lost its relative strength in the last week or so.
Yeah.
So there's no question, but this is a longer term view of the stock where I'm looking at a consumer product stock that's going to gain some traction. If you feel that the stock is not a good play, get out.
Mm-hmm. Dave is pointing out Abbott has resistance at 109.50. Thank you, Dave. So put an alert there on that and see how that rolls. Oh, CRISPR coming back up. Finally. Nice. Welcome back, CRISPR. Okay. Any other questions out there? Would you recommend Brian Shannon's books and the CMT? I don't know Brian Shannon's books, so I don't know whether I'd recommend it or not.
Yeah, I know Brian very well. Brian's an old colleague of mine. His AVWAP theories are very sound. So yes, I would recommend them. Brian also gets into a lot of trading type of methodologies too, like where to place stops and how to approach trades.
DOCN. Chart looks good, but you have if you look back on October 4th on DOCN, you'll see the high is 38.30. That is where you put your alert, right at 38.30. Why? Because when it hits that, then it's entering the gap, right? So there's a nice gap there at 38.30. The stock looks good. It's obviously strong, but you want to make sure that it's not going to be facing some resistance off of that bar from August, from 8.4. So put your alert there at 38.30, and if it triggers, wait for it to confirm that it's going in the gap, and then you can take your position. Simple as that. Okay, let's see. What else we have? SPY's just kind of bouncing around here. Just slow, steady pop here. It's recovered from the auction, but SPY's up 70 cents today. But there's not much volume. There's not much news. We're getting into a slower season, and it just looks like it's grinding on its way up towards the all-time high. And I would expect it to continue doing that unless there's something occurs that stops it. Microsoft, by the way, after a few days of being fairly weak, has recovered. Really is, I mean, this is that WADM trade. This is exactly the kind of setup you'd want to see for a WADM, where you're going to be selling the at the money puts for this week. And, let's see, you go to Microsoft here and you look at the December 22nd at the money puts for $3.75. They're $1.80, somewhere around there. And then you go out to, let's say, January 19th. You buy the 375 puts. It's a 536 debit. You're not getting enough. Probably not on your at the money put. So if you were to do it, you probably have to do the 377.50 puts, selling them for 315, and then you buy the 375 puts in January against it. And that's how you would do sort of a WADM on Microsoft. But it's got the right what do you call it? It has the right
characteristics
for it. A little pullback on SPY here. No real news on that. Okay.
One of the bigger problems that you have right now with premium selling strategies is that there's no premium. And so you're having to go very, very close to the money. You can see this is what the VXX has done. It's had a little bit of a pop here recently. And in fact, today it's up a little bit. So let's take a look at that. It's been so dirt cheap. So you can see how option implied volatilities are on the rise. Is that bearish? Could be. What you will have oftentimes is when it gets that cheap is you've got asset managers who want some protection in here. They want to still ride the market higher and higher, but they'd also like to have a safety net. And so they are not bearish. They're just simply looking for a very cost-effective hedge. And VXX is longer-term options, implied volatility versus VIX, which is shorter term.
Mm-hmm. Dave mentions PDD as another potential WADM setup, and that also is set up nicely. A little weak today, but still holding in its consolidation there. Let's see here. Team still powering up here. Ad desk moving nicely. Here's a fairly expensive stock, I think. Let me take a look here. Yeah, look at INTU. Now that's a nice breakout.
I'm still back on team. As I mentioned earlier, I would definitely be day trading that. Love that.
Team is a good day trade. INTU has a upward sloping line that's coming right up on right now. I'm going to put an alert on into it at 6:28. So I'm putting an alert on Intuit at 6:28 here. And that's sort of, Intuit's the type of that. Now that's where you would do a call debit spread on a stock like Intuit. It's got a very, $12 almost ATR. It's a bullish stock. It's in a bullish formation. It's a bullish market. If you can get Intuit to break that high of the day today, I think that's a good call debit spread that you could consider taking. Let's see. VIX really is at some historic lows right now. I mean, that's one of the only things giving me pause is how low VIX is. That right there tells you about your volatility and your option pricing. Right now it is an option buying market, not an option. That's why I'm not selling many puts at the moment. I'm just not getting the premium to do it. But That's not going to last forever. You're going to get some volatility in here. Google staying right above that VWAP, not breaking through. I wouldn't be surprised to see Google have a nice end of the day run going in here. And then Netflix coming up to 500. I would wait for that to break as well. Netflix at 500 here. Netflix has a nice chart. It's only that $500 price point that would give me some pause, but it does look like it's in the gap from way back in last January, a year ago. So,
the one thing about Netflix is do not chase stacked candles.
Nope.
This stock pulls back all the time. And one exercise that you should be going through is before you hit that buy button, you see this big run up in Netflix back a few days ago. Take a look at what it's done previously. What is the nature of the beast? And when you see that previously you get these big pullbacks, big rally, big pullback, that tells you you do not have to hurry into this stock. And so if you look back and you saw that, and then you saw this, you'd set your alerts and you go, hey, you know what? When I get that little reversal, that dip reversal, I get to evaluate this, and then I can decide if this is a good buy.
Yeah, certain stocks have character. I mean, certain ones don't. I mean, I wouldn't say a stock like Apple has any character. I mean, it just tends to be strong. But take a stock like Boeing, for example. I don't like trading Boeing because it is prone to news-related, dramatic, sudden changes in direction, right? I mean, Boeing, there are certain stocks that just take your technical analysis and say, fuck off, because, Boeing can have the most bullish chart there is, and the next day drop $10 off of the fact that it only delivered 180 planes instead of 185. So, know the character of the stock you're trading. Some stocks don't, but stocks like Boeing, stocks like Netflix, those stocks tend to not be for the faint of heart, and you need to certainly be very nimble with them. Take profit when you can, get out fast. Yeah. All right. Wayne, now we support and or resistance, a stock can continue on, obviously, and at times can come back and check that, or it could just be a temporary break. Everyone has their sensitivity to what they require to get that confidence. Some people want to see the next day, that continuation, right? It breaks the SMA. You want to see the next day that it will continue in that direction. Others jump right in. The moment the alert hits, they jump in. That tends to get you in a lot of trouble. The longer you wait, the higher your standard is for confirmation, the higher your win rate's going to be. Just simple as that. But yes, you might miss larger parts of a move if you have a higher. So it's a trade-off, right? If you have a lower standard for confirmation, you just need to see a couple of candles on the 5 minutes, breaks through. You will have bigger gains, bigger wins, but you'll also have some pretty significant losses because a lot of times that might reverse. If you're more patient and have higher, more conservative standards, you sometimes want to wait to see that confirmation in the daily. You want to see an HA reversal and then continuation on the daily before you consider it confirmation. Okay, well, you're going to have a higher win rate then, but you'll probably win a little bit less, make a little bit less on those trades because you missed part of your move. So there's a give and take there. It really comes down to the trader and the market and the stock, right? If you have a break of resistance, the market is strong, the stock looks strong, maybe there was a news event for the stock, maybe your standards for that confirmation do not need to be as high. You have a stock, the market is weak, the stock is strong, it breaks through. You probably want to have some confidence that the market isn't going to drag the stock back down and it's not going to lose that relative strength there. So again, it all depends. There's no hard and fast rule. But yes, if you're considering confirmation 1 5-minute candle after it breaks through an SMA, you're going to get in trouble more times than not.
Yes, and for me, confirmation is checkboxes. Checkbox, 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 checkbox. And that's why I put custom search up. The more of these boxes I have marked, so if I have relative strength versus the market, and I have D1 and every other box marked off, that's confirmation across multiple time frames. If I'm adding trade signals to it, compression breakout, 3-8 crossover, every other technical indicator, it's simply confirming that that stock is on track. Now, if I marked every box, I might only get 1 or 2 results. Maybe I don't get any results. And that is the trade-off, is that you're going to be very, very restrictive. If I hardly mark any boxes, I'm going to get lots of results that I have to flip through. And then I'm going to have a lot of fakes in there.
I pointed it out before. I'm going to point it out again because it's such a good example. Continue to watch Dollar Tree here. See this downturn in the market? Look at what Dollar Tree has done. Dollar Tree is right back where it was before the market dropped. That is really good relative strength. Does that mean Dollar Tree won't retrace here if the market continues to drop? No, of course not. You can only handle so much of an undertow, but it is very clear there is concentrated buying going in that stock right now from institutions. So I'm going to stick with the long. I'll probably add to that long tomorrow. But that, if you ever want to see an example of relative strength, that right now is showing you exactly what it is.
Okay, I've got a good example from yesterday. ILMN was a stock that I showed in the chat room yesterday. And I'll zero in on one particular period, which is right about in here. And I'll put the S&P overlay up. And so right in here, you've got the S&P pulling back, pulling back, pulling back. What did the stock do? Tick, 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 higher. But the significance of this could really be seen best on the daily chart, because this is where that major moving average came into play. So typically when a stock comes up to a major resistance level or a major moving average and the market pulls back, whap, 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 they're going to smack that thing right down, right in here. Whap, 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 smack it down with the market when it's testing that 100-day moving average. But it didn't do that. It kept creeping higher. That told me that 100-day moving average breakout was legitimate. Whew. And this is one that I also told everyone right about here during the trading day. I would have ILMN on my radar.
Someone asked about Square. Yeah, I like Square. It's yeah, I mean, Square's a good long right here. I probably just day trade it. I wouldn't swing it, but I like the look on Square. Nice show.
Very tight price action. A lot of buying in there. No sellers. Yeah, this is the kind of stock you want to get behind.
Mm-hmm. AUVI, what in the world? Oh,
You'll
okay.
also notice on Square, big choppy moves. So you don't want to be buying the high of the day. You want to be buying those dips.
Yes. I used to have Square on my no trade list a long time ago. Settled in since then. See here, Dollar Tree coming up to the high of the day. As SPY goes down, that is good. Adobe dropping. Home Depot, someone just went. Let me take a look at Home Depot here for a second. On Home Depot, I'd probably wait until it passes 355. That's me on Home Depot. I wouldn't trade it before then, but I mean, there's no doubt it's got relative strength right now. It's holding up. It's holding its gap up from last Thursday. It has decent, well, had decent volume today. Nothing has great volume. It had it. Yeah, I mean, Home Depot looks primed for a breakout. Again, it depends if you're conservative or not, right? I mean, if you're conservative, you wait for the breakout. If you're not, you try to hit the breakout now. So all depends on you. But yeah, I like it. I like Home Depot. Like I said, I'd wait for it to break that number, and I'll put an alert there. VIX turning positive for the day for the first time. Okay. Market is dropping to VWAP. So let's see what happens at VWAP here with the market as we hit the 2 hours to close mark. And it just blows right through VWAP on this candle. But this is the area of confirmation, right? Is the market below VWAP? Right now it is on this 1 5-minute candle. But I would need to see several of these to confirm that the market is staying below VWAP right now. I tend to think with this level of volume, it doesn't take much to push it down there. We'll probably see it rebound. But, again, I'll wait and see what happens. Till then, I'm not going to trade until I see what the market's going to do for the rest of the day. I mean, until I see what direction it's going to take. Is it going to continue dropping and stay below VWAP and head into negative territory? Or is it going to pounce back up and finish the day strong? Either way, you're kind of at an inflection point in the market right now. And that's why it's a good moment to take a step back, look at what stocks have relative strength during this drop. That is the primary thing. And that's what you should be keeping an eye on. What stocks are staying strong during this drop?
Yes, and we have a strength search called Relative Strength 30. And that's another column configuration that you can add. You can see the strength right in here. Not seeing a lot of it right now on the stocks coming up in this search, but BDX has got strength on a 15-minute and 30-minute basis. So you can see this is the type of stock that I would want to be long if the market finds support at the VWAP. It's going to continue to power higher. And so you can see it here because you've got a new high of the day, and you can see the relative strength right in here. Ideally, you want to see relative strength all across the board like this. You got 15, 30-minute, 1 hour daily. And
take
so
a look at SAVE.
Take a look at that. There you go.
Take a look at the shittiest airline in the world, but take a look at Spirit. And I mean, look at this bounce off that low from 1113, but look at it today. Look at this steady, doesn't care what the market is doing. Upward march, cheap stock. SAVE is not a bad quick day trading long. Maybe even since it broke the SMA, you could even think about swinging this, a couple of calls on it. SAVE's not a bad stock here.
What's the symbol on it?
SAVE, SAVE.
SAVE, that's what it is.
Yeah, or SHIT, because that's what the airline is.
That's what I was entering. Yes, nice. All the
That is
airlines
relative
actually
strength.
are in pretty good shape right now.
I mean, that's what you want to see when you have the market dropping like this, and you look at a stock like Save, and you see that just powering up as if the market didn't exist at all. That's what you want to see in a stock. It's a cheap stock. You can buy yourself some shares, whatever. That's not a bad bet, you know.
And here's the kicker, right down in the lower right corner. Volume.
Yeah. SPY bouncing back up the VWAP here. Coming into the 11 o'clock hour on my end. And let's see what it does on its next candle. That'll be pretty telling. But I like to look at, you know, new highs also during drops like this. I mean, I would consider something like Nike, but it has earnings coming up. But I think MasterCard, let me see here, MA, let me take a look at MA here. No, I don't like that. Meta. Oh man, Meta is nice. Really like Meta here too. I might like Meta even more than Google at the moment. I don't know. Really like Meta. I like this, the strength against this drop. Yeah, I like Meta. All right.
Kind of reaching that 2-hour mark, so I think we should probably conclude.
Yeah, absolutely. All right, everyone. We'll be back next Wednesday, I'm sure.
We will be back next Wednesday, everyone. Thanks so much for attending. Merry Christmas. We'll see you after the holiday.
Merry Christmas, everyone. Bye-bye.